Hello and welcome. Just a quick one. As you know, the exams are just approaching, and the emotions are high for many of us. Yeah. So I want to mention that the purpose of this session is just to show you how to answer advice type of questions. So that is our focus. Advice type of questions. So I just want to quickly show you how to answer such kind of question in the exam, because now at this level, if you see advice, then we're talking about advanced financial reporting. You are the manager. You are in senior management. You are no longer a junior at this level. Okay, so I have a question with me here that is going to help us see just how to answer advice type of questions on standards. So first things first, in every exam, we've been asked that the requirement is advise Lusambo on how the above transaction should be dealt with in its financial statements. So you're advising on how this one should be dealt with. So know what you're advising on should be dealt with in the financial statements. Then the other thing the examiner says, with reference to international financial reporting standards where appropriate. Okay. So here, don't just advise. Your advice should have some basis. So that's the point here. Okay. So I have an exam question here that I would like to use as an example to explain to you how to answer standard advanced type of question standards. So there we go. Let's read the question and then we discuss how you should do it in the exam. Let's go. Lusambo owns a chain of health clubs and has entered into binding contracts with sports organizations, which earn income over given periods. The services rendered in return for such income include access to Lusambo's database of members and admission to health clubs, including the provision of coaching and other benefits. Okay, those are things that are going on in Lusambo PLC. Okay, so these contracts are for periods of between 10 and 19 months. Lusambo feels that because it only assumes limited obligation under the contract, mainly relating to the provisions of coaching, this could not be seen as the rendering of services for accounting purposes. As a result, Lusambo's accounting policy for revenue recognition is to recognize the contract income in full at the date when the contract was signed. Boom. Did you see that? Now, look at the requirement. Advise Lusambo on how the above transaction should be dealt with in its financial statements with reference to international financial reporting standards where appropriate. Now, as a student of financial reporting or advanced financial reporting, it is important that before you give somebody the advice, you know what you're advising. Now, look at the requirement. It says with reference to international financial reporting standards. That means the first thing you must know before you begin to advise, find out where there's any standard that deals with the issue at hand. And in this context, I want to mention that if you have no idea the kind of standard that deals with an issue like this one, then you have to go back to your manual, because that is very, very worrisome. So here, the standard we are dealing with here, we are dealing with the standard called Ifrs 15. You know, revenue recognition, because this man, Lusambo PLC, is recognizing revenues in full. So we have a standard called Ifrs 15. Now, this standard deals with revenue recognition. That is the first starting point. Now, I want to give my advice on this one also because of my experience with questions like this. When you are asked to advise somebody, the first thing you must understand is that what does it mean to advise? If you're advising somebody, you only advise somebody because there's something that you want them to do better next time. So in the exam, if you see this word here, advise, it means something's not okay in the situation they've given you. And it is your job to find out what is not okay in this situation. Now, the examiner does not give you marks for identifying what is not okay. For example, let's go. Lusambo's accounting policy in this regard is not okay. You see, the accounting policy is bad, it's messed up. See how Lusambo recognizes revenues in full when the contract is signed. So is accounting policy number one is wrong? Have you seen? But the exam will not give you marks for identifying that the accounting policy is wrong because he knows it is wrong. That is why he has put in the question, in the scenario, for you to see. What the examiner wants is your advice on how this could have been done or how it can be done better next time. That is what is going to give you marks. So it is important to be careful when you're dealing with the standard. It might seem to be a simple question, but look at that, man. 7 marks is not easy marks. This is advanced financial reporting you're dealing with here. Okay, so let's go. So as I mentioned earlier, when you're advising somebody, you must know what you're advising. Otherwise, if you don't tell me what is wrong with me, it will be difficult for me to appreciate your advice. So in order for your advice to be appreciated, point out areas where you feel things are not okay and how you feel they should be done in order for them to be okay. That is your aim in the exam as a financial accountant. Okay, so let's go. Let's find out what is wrong here first with Lusambo PLC. Then we can know where to start from advising because already we know the reference we're going to use here is Ifrs 15. Now let's find out what is wrong and see if that thing which is wrong is not inconsistent with the Ifrs 15. Let's go. Lusambo owns a chain of health clubs and has entered into binding contracts. Okay. These contracts, yes, which earn him income over given periods. Okay, so you see, over given. This is a very important statement to explain later. Now, the services rendered in return for such income includes access to Lusambo's database of members and admission to health clubs, including the provision of coaching and other benefits. See the services here. There are a lot of things. There's database, there's admission to the health clubs, and then there's also provisions of coaching and other benefits. You see that? So there's a lot going on in this question. Now, the other thing that is wrong with this question, apart from the accounting policy, is that Lusambo feels that because it only assumes limited obligation under the contract relating to provisions of coaching, this could not be seen as rendering of service for accounting purposes. This is also wrong. Lusambo assumes limited obligation. You see? So this is also another issue which is not okay. But make no mistake, in the exam, do not begin by explaining what is wrong, because that means you are also wrong. Your job is to advise. The examiner knows what is wrong already. What the examiner is looking for is your professional advice with reference to relevant standards, which you must know. In this case, Ifrs 15. Okay, this is good. Let's go. So now here we go. Now that we know 2 important things in this question. Number one, Lusambo assumes, Lusambo accounting policy is bad. And then number 2, Lusambo assumes limited obligation. So in order for you to be able to advise properly, first of all, in your answer sheet, make the reference to the relevant standard here. So what are the recognition criteria for this standard? What are the measurement rules of this standard? Those are the things you must bring in so that when you be advising, you are not just talking from without, but from reliable information. According to Ifrs 15, so and so and so should be like this. But in this situation, what we are seeing is this, which is not inconsistent with the standard here. You are advising based on the applicable knowledge that exists from the relevant standard. Okay, so let's go. This is just a quick one. So let's go. I'll take you to the let's do the board. I'll take you to the board and okay, so we are beginning to answer here. So in your exam, what you do first, since you're doing with Ifrs 15. So in the exam, what you must do first, talk about those 5 steps criteria for this standard. Ifrs number 15. So in your writing, if you're writing to the examiner, you should be able to say something like this. You said the applicable standard to this scenario is Ifrs 15, revenue from contracts with customers. Now, this is standard as a 5-step process for recognizing of revenue, which are outlined below. Then you make such statement and then you number those 5 steps. 1, 2, 3, 4, 5 steps. What is step number 1? You explain step number 1. Step number 2, step number 3, step number 4, step number 5. So what are those steps? There we go. I knew that I just have to do it. Let me just take you back to the steps. Oh yeah, there we go. Okay, so those are the steps there. You see? So in answering there, once you explain that this situation looks like a situation that is dealt with under Ifrs 15, that this standard Ifrs 15 has a 5-step process for recognizing revenue from contracts with customers. So what do? You write step number 1. The following below are the steps involved. Then you explain, identify contracts with customers. Step number 1. Number 2, identify the separate performance obligation. Number 3, determine the transaction price. Number 4, allocate the transaction price to performance obligation. Then number 5, recognize revenue when or as the entity satisfies performance obligation. So we are going to explain how this point should now be brought out in the answer sheet. Once you list these 5 steps here, now you begin to advise based on these 5 steps. So let's take, for example, in order for advice to be effective, do not condemn everything. Be realistic. Point out areas in which this Lusambo PLC is doing fine, and then point out areas where they're not doing fine and how they can do better. That is your aim. So let's go. Identify contract with customers. Okay, in Lusambo's situation here, would you say there's a contract? Yes, there is, because we've been told Lusambo entered into binding contracts. Now, because the contracts are binding, that means there is indeed an identifiable contract with what? With customers. In this case, the sports organizations. You see, that is how. So you point out, well, it is true. It appears that in this situation, Lusambo has fulfilled the requirement of step number 1. A binding contract with customers exists. Okay, what other item has Lusambo fulfilled here? Look at step number 3 and step number 2. Step number 2 says identify the separate performance obligation. Are you seeing? Separate performance obligation. Has Lusambo fulfilled this step? Not at all. Why do we say not at all? Because here we've been told that Lusambo only assumes limited obligation under the contract. Have you seen? Lusambo assumes here. Lusambo assumes limited obligation under the contract. Have you seen? Assumes limited obligation under the contract. So step number 2 has not been fulfilled in this case. But don't talk about step number 2. What is not fulfilled? Just highlight it in your question paper. Talk about what he has done, then come and criticize later. Okay. And you've seen that this could not be seen as a rendering of services for accounting purposes. So somebody does not recognize these services. For example, we have the services that include access to the database. You have number 1, the database service here. We have database service, okay. And then we have admission. See, there's a number of services here which is not recognized. And then we have a provision of coaching and other benefits. So this is why it's limiting himself. It's not recognizing other services as separate performance obligations. Okay. Anything else you have to see in this question? Go to step number 4. Or step number 3. Determine the transaction price. Now, make no mistake here. If the examiner does not talk about the price, assume the price was agreed upon. If the examiner wanted you to talk about the price, he could have put a note or anything in the question to let you know that the price was not agreed upon. So do not say they did not agree upon the price. No. because the examiner has not told you they didn't agree. So in this context, assume the price was agreed upon. No one is recognizing revenue in full at the start, maybe because the price is known. You have to make a lot of common sense for you to pass these papers. Look at step number 4. Step number 4. So we've seen that Lusamba has fulfilled 2 steps. Step number 1, this step has been fulfilled, yes. And step number 3 has been fulfilled. The transaction price is there. Now, where Lusambo PLC is not doing fine in step number 2, step number 4, and step number 5. And that is your basis for your arguments. So once you list out these 5 steps and then point out where they've done better, for example, the contract is in existence, and then it appears the price also has been agreed upon. Have you seen that? Now, what do you do next? Now you bring out your advice. It's like in a home. You don't just wake up and start criticizing your child. No, you tell them areas in which they do better first. And then later on, you point out areas where they're not doing fine so that they should be able to improve. Don't make your child feel like they are always wrong. I'd appreciate something about them at least. It will motivate them to want to do better next time. So it's the same with the examiner here. This, friends, is what is done in real life. So be the manager in that exam. So let's go now, let's advise. So what is our advice here? So our advice should be based on these principles, these 5 steps here. So now we are advising based on the 3 things which Lusambo PLC has not done better. So let's go. Let's begin with number 2, identify the separate performance obligation. Now, under this one, what is your advice going to be here? Yes, here, Lusambo assumes limited obligation. You see this one? Lusambo assumes limited obligation under the contract, mainly relating to provision of coaching. And because he doesn't think they are separate separate performance obligations, he's unable to recognize to allocate the transactional price among these services. That is why Lusambo is recognizing the contract income in full. Have you seen? Because Lusambo is unable to distinguish, have you seen, or to separate the different performance obligations, is ending up recognizing the contract income in full, which is not supposed to be the case in accordance with Ifrs 15. So now here, you bring out a point that Ifrs 15 says about this kind of situation. Are you seeing? So now, let's now bring out our answers, okay? So there we go. Okay, so if you're explaining point number 3 on identifying the separate performance obligation, this one should have said Lusambo needs to consider this. Despite Lusambo's claims, for example, that if there is no separate performance obligation, under Ifrs 15, a provision of services is considered to be a separate performance obligation. And as such, a separate transactional price should be allocated to this service. What this means is this. If you came to me today and told me, hi, Shadrick, please hire me your car. So I give you my car for 500 kwacha today, so that you should go and use it. Now, when you enter into a contract with me for using my car maybe for 7 days, you also tell me, Lusambo, but Shadrick, I don't know how to fix a flat tire. So in case of a flat tire, would you please also be able to be the one to come and fix it for me? Are you seeing? That is a different service. I'm giving you a car in good condition at a price of 500 kwacha, but replacing a flat tire is not supposed to be part of the contract. It's a separate performance obligation, which is going to attract a separate amount of money to be charged. Which means that if I say, whenever there's a flat tire, I'm going to be charging you 100 kwacha, I should not recognize that 100 kwacha in my books as revenue because I've not performed the obligation. You see? That is what Lusambo PLC couldn't see in this situation because he has a number of steps. Look at that: database, admission, and then there's the provision of coaching, and other benefits. You see those? So Lusambo PLC should have recognized separate performance obligations and be able to recognize revenue as he satisfies those separate performance obligations. So you could have talked about something like that, and now Ifrs 15 talks about that one. Remember, don't talk from without, talk from the standard. The standard says that in a situation where there are different performance obligations, the transaction price should be allocated to the separate performance obligations. Are you seeing? Which Lusambo PLC in this case did not do. Are you seeing? Now look at step number 4. Step number 4 here, what does it say? Step number 4 says that allocate the transaction price to the performance obligation, which Lusambo PLC has not done. Are you seeing? Lusambo PLC has not done because Lusambo PLC has recognized the whole amount in full at the time when the contract was being signed. So in this context, should have said something like this. A performance obligation satisfied over time meets the criteria in step number 4. Have you seen? So it looks like Lusambo has got different performance obligations in here. Number 1, to coach, to provide the database services and other services, which means that in order to allocate the transaction price among those performance obligations and begin to recognize one by one. When one is fulfilled, you recognize over the period of time. Anything else you could have talked about here? Remember, I'm not going to go into a lot of details. This is just a sample of how you can argue from the point of view of a standard. Step number 5, what have we been talked about in step number 5? Step number 5 here is what Lusambo needed to do. After it's done step number 3, after it's done step number 4, allocating of the separate performance obligation, now Lusambo needed to do the step number 5. So those obligations are going to be split, which means that if, for example, the database service is done, what do? You recognize the revenue. The admission service is done, what do? You recognize the revenue. And then the provision of coaching and other benefits, even these ones, you treat them separately. Did you see that? You treat them separately because they are separate performance obligations. So don't recognize the revenue at once. So in this context, you are not pointing out that Lusambo was wrong. He did this. No. You are referring what Lusambo did to what Ifrs 15 says. Lusambo should have done better. Are you seeing? So number 1, those 3 points. So you're supposed to give advice from the 3 points. Now, those 3 points were supposed to be the basis of your argument. So that's how you are supposed to answer an exam, an advice type of question using a standard. Bring out what the standard says about the issue, and then point out areas where this company or this manager has done better, and then argue from the point where you feel they've not done better, and then give advice what they should have done. So for advice in this case, Lusambo should have identified the separate performance obligations in line with Ifrs 15. Are you seeing? And once these are identified and separated, Lusambo should have allocated the transaction price among the performance separate obligations. Once that has been done, Lusambo also needed to do it to recognize revenue when or as the entity or as it satisfies the performance obligations. Are you seeing? It's like when you go to a movie, you buy a ticket from that movie, or whoever sells the tickets. For them, they don't recognize revenue because you've paid. No, you are a liability to them. They only recognize revenue the moment you watch the movie because they've satisfied their obligation. So it's in the same case with this one, or even the example I gave of a car. You get my car on hire and also want me to fix your tire. I only recognize revenue when I fix your tire. If I don't fix your tire, even though there's a contract existing, there's no revenue there because I've not delivered my obligation to you. So that's how you can just quickly be able to answer an advice type of question in the exam on the standards. So that was our question. The question for you, Ifrs number 15, revenue with contracts from customers. And no, there was a leakage in this question. Huh? See, they told you that Lusambo earns income over given periods. Have you seen? This statement is very important. Lusambo earns income over given periods. Do you see that those contracts give him income over given periods? Now, according to Ifrs 15, Ifrs 15 says that if you've entered into performance obligations that are satisfied over time, You should be able to use a straight line basis for recognizing of revenue. Step number 5, as you satisfy the obligation, that's when you recognize the revenue because it is over a period of time. So Lusambo, yes, here, in conclusion, we can simply say that now, once you first you talk about what is wrong, and now what do you do at the end? At the end, now hit the hammer on the head of the nail. Don't miss. So what do you do at the end? Now you say Lusambo's assumption on the accounting policy. Have you seen? Is inconsistent? Is not inconsistent with the Ifrs 15, and there's no proper basis. Are you seeing? As it is not supported by any accounting standard. You see, Lusambo's actions are not supported. So point out that Lusambo's policies are not inconsistent with Ifrs 15. They are in conflict, and they are also not supported by any accounting standard. And as such, Lusambo should be able to recognize revenue from these contracts in line with the Ifrs number 15, revenue from contracts with the customers. That is what you're supposed to come and talk about. So that was going to give you a proper basis of getting that 7 marks. Remember, 7 marks is no joke in the exam. It's no joke. So you have to show the examiner that you know what you're talking about. So because I'm such a nice man, what I did, I came with an assignment for you, which I hope that you're going to answer and be able to forward the answer to my WhatsApp line, which is right here. Yes, that is the number. So pause the video and read this question, please, and then try to answer it yourself. Then when you answer, WhatsApp your answer, your solution to this number right here, 0953-979798. I'll be happy to give you feedback and be able to advise where necessary. But in the meantime, we want to say thank you so much for watching. Have a lovely day. Bye-bye. Did I say bye-bye? Remember, when you're dealing with the standards, what you must do, remember, bring out what the standard talks about the situation, point out areas in which the company has done better, the individual has done better, and then point out areas where they've not done better, and what they must do for them to improve, because that's what the examiner wants you to do. And then lastly, but not the least, also what do you do? Be able to give relevant information from applicable standards when you're giving a summary. So that's what you do every single time. Thank you so much. You have a beautiful day. Now, the true bye-bye. Bye-bye.